Welcome to the channel Get Rich. Today, the company we are going to look into belongs to a technology company. So today we are going to look into HCL Technologies Ltd. So we are going to look into their business, what are they doing, where their revenues are coming from, and we are going to look into their financial statements and finally the valuation of this particular company. So let's get started. So about HCL Technology Limited. So HCL Technology offers IT services, ER&D or engineering R&D services, and they also have their products and platforms. These are the three core categories which are providing revenues for this particular company. So they supply these services and products to BFSI sector, retail, health, telecommunication, manufacturing, media, and high-tech verticals. So HCL Tech has about 250 Fortune 500 and 650 Global 2000 clients. So they have grown organically and inorganically around 13% CAGR over the past 5 years. So they're the fastest growing large technology company, but if we compare with the average growth of the other companies, other peers or higher companies, they did about 63.2% over the past 5 years growth. So if you look into their three main categories, as I just mentioned, so they have IT and business services, engineering and R&D services, they have products and platforms. These are the three main categories where they are generating their revenues from. And if you look into their guidance of financial year 2023, so their revenue expected to grow about 12 to 14% in constant currency, and their EBIT margin is expected to be around 18 to 20%. So then let's have a look at some of their key parameters. So first, if you look at their market cap, they are about 2,79,000 crores and they have a PE of around 20.7, and their return on capital employed is about 25.6%. That's great. And if you look at their return on equity, that's also 22.2%, more than 20%. That's good. And if you look at their return on assets, that's also 15.4%. That's good. And then if you look into their debt to equity, it's 0.1, so almost very less debt or almost no debt. So that's also good. And if you look at the price to sales ratio, it's 3.26. And if you look at the dividend yield, that is 3.113%. That's pretty good dividend yield. But then we also have to look into their payout ratio, how much they are paying out as a percentage of their net income. And if you look into their price to book value, that's 4.51. So these are the key parameters of this particular company. So then let's look into their price chart. So HCL Technology is about currently it's trading around 1000 rupees. So if you look at the past history of this particular company, so between 2015 and 2020, their share prices did not go up a lot. It's also in the consolidation phase. And then if you look into their from 2020 to 2022, it went up from 400 from Corona crash to almost 1400, and currently it corrected from 1400 rupees to about 1000 rupees currently. But then if you look into their P ratio, the current P ratio stands somewhere around 20. If you look into their average median historic P ratio, it's somewhere in 17 P. So most of their P ratio, they are trading somewhere in 17 because it's a median one. But then there are some times it even went to 25, 27 at some peaks. Even in the recent peak, it even reached 32 because all the tech companies ran up quite a lot in the recent days. So at that time it reached even to 32. Currently it's trading around 20p. But then if you look into their period, I mentioned Jan 2015 to Jan 20, it traded always around 15 p. So it's still trading above the average median PE, which is 17. Currently it is trading around 20. So then let's have a look into their business segment. Where are their revenues are coming from? As I mentioned, they have three main segment categories. So first one is IT and business services. They have about 72.1% of their revenues coming from IT and business services. And then they have engineering and R&D services. They have 15.8% is coming from engineering and R&D services. So if we sum those up, so from the services business, they generate about 87.9% of their revenue is coming from service business. They also have products and platform business. So they have about 12.1% of their revenue is coming from products and platform business. So if you look at their geographical mix, where their revenues are coming from, if you look at the different geographics, so from America, they have about 62.9% of their revenue is coming from US. And then 28.2% is coming from Europe, and the rest of the world, they have about 8.9% of their revenues. And if you look at their different verticals, so from which segment their revenues are coming from, or which vertical their revenues are coming from. So the first one is financial services, about 21.3%, and then manufacturing sector 17.7%, and then technology and services about 17.6%, and then life sciences and healthcare about 14.8%, and then public services 10.6%, retail and CPG is about 9.8%, and telecommunication, media and entertainment industry is about 8.1% of the revenues coming from these particular sectors. And if you look into their first key breakdown, which is IT and business services, if you look into their IT and business services, they have about $7.2 billion revenue is coming from this particular segment, and they have about 18.8% year-over-year revenue growth, and they also have about 60 plus innovation labs across the globe, and they have about 50 plus large transformation deals for this particular segment. So if you look into their offerings, what are their offerings in this particular segment? They have about hybrid cloud services, digital workspace services, next generation network services, dynamic cybersecurity and GRC services. So they are also doing cloud security as a service. So they have different cloud models, so they maintain the security, so you can look into detail what they are doing in that. So they're also doing about cloud security as a service. That's also going pretty good for this particular company. If you look into their key transformational wins for this particular segment, so a European multinational telecommunication company selected them for an end-to-end IT services, including digital transformation, cloud, and application and infrastructure. And if you look into their another deal, so a leading global healthcare provider has partnered with HCL to reorient their IT infrastructure applications and deploy their products into their large scale modernization and digital transformation. So they are also winning key deals. Also, if you look into their another one, so large cloud transformation program. So their HCL's cloud smart offering helped a leading North American based coffee and beverage client in rapid migration towards their consumer led cloud platforms. So they are winning a lot of deals recently. So also if you look into their another one, they also have a global energy and utility company selected them to build a new greenfield digital foundation. So that by leveraging their cloud smart offering, and also they have a large US based oil and gas company choose HCL to provide end-to-end and globally integrated data center and private cloud services supported by their digital products. So that's pretty good. They have a lot of deals in this particular segment. And then let's look into their second segment, which is engineering services. So they're the top two service provider. So they're the top two players in this particular segment. So they have 300 plus enterprise clients, 100 plus engineering labs. And also if you look into their frameworks, they have 60 plus digital frameworks and solution accelerators. So if you look into their end-to-end engineering services, they have product engineering, platform engineering, operational technologies. So they have new product and development, and they also have software product engineering, collaboration services, data engineering, network engineering, and connected experience. And also if you look into their recent acquisition, so they signed a definitive agreement to acquire Star Schema, a leading provider of data engineering services based in Budapest, Hungary. So this was completed effective April 2022. So this enhances their capability in digital engineering driven by data engineering and increases its presence in Central and Eastern Europe. That's good. They are also doing some acquisitions here and there. So they also did another one from they seen strong momentum from Actian. So they also took 100% stake in last quarter. So but that's not belongs to this particular segment. It belongs to another segment, which is products and platforms. So let's go look into their next segment, which is products and platforms. So they generate almost $1.38 billion from this particular segment. So they have 500 plus product releases. They have 20 plus major product releases. So they have a lot of things going on in this particular segment as well. So HCL Big Fix received a top score in Gartner Peer Insights UEM capabilities rating. So they also have different products which are pretty good. So if you look into their different categories, so the first one is HCL software. They have automation, commercial and marketing, digital solutions, data management, and so on. And they also have Actian. From them, they have hybrid cloud data warehouse, enterprise data integration, data management, transactional databases. And they also have a DROICE software. So this OPS service orchestration, business process observability, digital workspace. They also have industry software like telecom and 5G, industry 4.1, manufacturing, and so on. So if you look into their key transformational wins, so they have a global semiconductor company selected HCL to drive growth and eliminate risk on their DevOps and ensure proper function of their R&D process. And they also have a US based automotive manufacturer. They are engaged with HCL to work with Commerce, Big Fix, Domino, and Leap portfolios to enhance their business and manage their endpoint devices. And another client, which is Europe based retail company, they chose HCL to orchestrate critical projects and manage consumption during this peak of unpredictable COVID times. So they are also using HCL Commerce version 9.1 and HCL Workload Automation. So they are using these particular segments. So they have a lot of different product offerings. If you have to look into their different key product offerings, I have a list there in the slide. So with key product offerings, with customer experience, digital solutions, secure DevOps, security and automation, and then Action, and then dry IC software, and then industry software, and so on. If you look into their these part of the segment, so how much revenue they are getting? So out of their product and platform revenues, almost 30% comes from their license based revenue, and about 67% is coming from, for example, subscription and support, and 3% from their services. So even out of this particular pie, only 30% is coming from the licenses. All the other 67% is coming from subscription and support. So services based revenues is key for this particular company. So they are mainly service based company. And if you look into their new product launches, they have launched two new 5G applications to help mobile network operators. They are also doing a lot of different product launches, HCL DFM Pro and then HCL Workload Automation. They also launched HCL Athena. So they also launched HCL SafeSense and so on. So they are also doing a lot of new product launches. That's good to see. And if you look into their business areas, so they have about their presence in 50 countries. They have like 60 plus innovation labs, 100 plus engineering labs. So they have 215 delivery centers all over the world. They're in Canada, USA, and then in Mexico, they're Brazil, Portugal, Ireland, UK. They're also present in Europe, Spain, France, Netherlands, Norway, Belgium, Germany, Italy, Sweden, Czech Republic, Poland. These are all their delivery centers. They have like a huge list of delivery centers in even Asia, Europe, and US. And if you look into their clients, what are their clients are doing? So how good their client metrics are. So if you look into their client metrics, so if you look into the chart of 100 million plus clients, 50 million plus clients, 10 million plus, 5 million plus, 1 million plus, all of these clients are growing. So they are getting more and more clients with this particular category. So if you look into the $100 million plus clients, so year over year they increased the client base by one client. So it's increased from 15 to 16. And if you look at the $50 million plus, they increased 8 clients year over year. $20 million plus 22 clients, $10 million plus 30 clients increase, $5 million plus 31 clients increase, and then $1 million plus 73 client increase. So they are constantly increasing their client base. That's good to see. And also if you look into their client concentration to revenue, so top 5 clients belongs to about 11.6% of their revenue pie, and top 10 clients is about 19.8%, and top 20 clients is 29.1%. So they are well diversified. That's good to see. And if you look at their new key deals, so they have new large deals. For example, they have US based multinational information technology company selected them for their deep domain mode to digital engineering services. And they also have a Europe based leading public sector company that owns, operates, and develops railway infrastructure has selected HCL Technology to provide support for their entire end user workplace and print devices across various sites. So that's also good to see. They have strong booking performance this year. They have a new deal wins at about I think $8.3 billion US dollar, so 14% year over year growth. So their annual contract value is higher by 21% year over year on full year basis. So they are also doing a lot of new key deal wins. That's good to see. And also I have a separate list which mentions all of their new key deals mentioned by them. So they have a Europe-based manufacturing company signed an end-to-end services agreement. So a Canadian integrated energy and utilities companies, and then a Europe-based global consumer good company, and then Novo Nordisk, a multinational pharmaceutical company, has expanded its engagement with HCL Technologies. and they also have Europe-based leading global technology company expanded their partnership. The HCL software signed 677 new customers, including large and top global corporations and iconic brands across retail, consumer packaged goods, banking, financial and insurance sectors. So they also have a lot of new client additions. So that's good to see. It involves a large and small clients, so that's pretty good. They also have a lot of new deals coming up. And if you look into their employees, so their total headcount is about 2,08,877 with net addition of 39,900 during the last year. So it's up 23.6% year over year. They are adding a lot of new employees. So that's good to see. They have confidence in their growth trajectory. And if you look into their attrition rate, so it's excluding the involuntary. So if you look into the attrition rate, it was about 18% in fourth quarter financial 2019. It dropped to almost 10% in fourth quarter 2021, and then now it increased to 22. It's about 22% in fourth quarter 2022. So it's about 22%. It's quite a lot, but then it's not only for HCL Tech, it's all over the tech companies. So the attrition rates are increasing. And if you look into their financial statements, so their revenues is growing by about 10% CAGR for the past 4 years. And if you look into their net income, it's increasing by 7.5% CAGR. And then if you look into their EBITDA and EBIT, it's increasing by 12%. And if you look into their EBIT margin, so it was about 20, even 23 at some point. So currently it dropped to almost 18%. But then the management guided for the EBIT margin to somewhere around 18 and 20%. So currently they are at the low end of their guidance. So they can further increase their margin to even 19 or 20% because their guidance is between 18 and 20%. So currently they are at the lower end. And if you look into their operating cash flow divided by net income, so they are generating strong operating cash flow when compared with the net income. It's about 4-year average, about 125%. So that's pretty good. And if you look into their income statement year over year, so they are increased their sales from 16,427 in June quarter 2019 to almost 22,000 in March quarter 2022. So they are increased their sales pretty good. And if you look at the net profit, it also increased from 2,200 crores to almost 3,600 crores in March 2022. And then if you look into their year over year financial statement, so they in June 2011 they have about 15,000 crores. Currently in March 2022 they have about 85,651 crores sales. So they have their sales have grown about 18% CAGR for the past 10 years. And if their profit grown about 23% for the past 10 years, and their if you look into their 5-year average is 10%. And if you look into the net profit, it increased from 1,647 crores to about 13,500 crores. So if you look into their dividend payout ratio, so as we saw in the snapshot, so they have about dividend yield of about 3.11%. But then if you look at the dividend payout, they are paying out pretty strong. So they are paying about 88% of their net income, paying out back to the shareholders. That's good to see. But then they mentioned that they are planning to pay about 75% of their net income back to the shareholders. So you can get 2.5% dividend yield in this particular company. So then if you look at the return on equity, that's also about 25%. That's good. And then if you look into their balance sheet, so the balance sheet increased from about 13,900 crores to about 89,000 crores. They have almost no debt. So that's pretty good. And if you look into their cash flow statement, so their operating activity, so from cash from operating activities about 16,900. And if you look at their financial activity, 14,500 is going away. Most of them is going for paying out their dividends, but then they still have free cash flow. That's pretty good. And if you look into their PAT growth based on the analyst expectation, so the analysts are expecting them to do about financial 2023 about 99,000 crores or 97,000 crores in financial 2024. They are estimating them to do about 1 lakh 8,000 or 1 lakh 12,000 in this range. And if you look at their profit after tax or net income, so they are planning, or the analysts are expecting to do about 14,300 in financial 2023 and 16,900 in financial 2024. If you look at their peer comparison, so they have peers TCS, Infosys, Wipro, Tech Mahindra, L&T, Infotech, and Mindtree. And if you look at their peers, so their PE is about 20. And then if you look at Wipro, it's also studying about 20. Tech Mahindra is about 19.75. TCS and Infosys are trading at a bit of a higher valuation. So these are their main peers. And if you look at their shareholding pattern, so the promoters are slightly increased their share, and then FIIs are selling or decreasing their shareholding, and DIIs are increasing their shareholding. That's usually the phenomenon. And if I are selling, DIIs buying, so that's always contradicting. And then the public shareholding is also slightly increased. If we look at the mutual fund, what are they doing in the recent months? So they are constantly buying or increasing. So as we just saw, FIS are selling and DAs are buying, so mutual funds are buying this share in the recent months. And if you look at the who are the top shareholders from the mutual funds, so SBI ETF Nifty, SBI ETF Sensex, SBI Blue Chip Fund, SBI Equity, Parak Parik, FlexiCap, Regular Growth, ICICI Prudential, and then ICICI Technology Fund, Aditya Birla, Sun Life FlexiCap, Mirai Asset, SBI FlexiCap, ICICI Prudential. So these are the companies are holding this particular company, and most of them are slightly increasing their shareholding. And let's talk about the valuation. So if you look at their revenue in 2021, so their revenue is about 75,379 crores, 2022 85,651 crores. I'm expecting them to do about 96,786 crores in 2023 and 1,08,400 crores in 2024 with a growth of 13% and 12%. Management gathered about 12 to 14%. I am estimating them to do about 13% for the next year and 12% for the year after. The net income is 11,145 crores in 2021, 13,499 crores in 2022. I am expecting them to do about 15,254 crores in 2023 and 17,084 crores in 2024. Also, I am expecting their EBIT margin to stay at this level, so they can slightly improve, but as a conservative estimate, I am estimating their EBIT margin will stay at this level. If you look at the price target with the current valuation with the PE 20, so 1 year price target would be 1,126 rupees, 2 year price target would be 1,261 rupees. So the price cumulative growth of 12% for 1 year and 26% for 2 year. If you calculate the price target with the PE of 21, then in that case the 1 year price target would be 1,182 rupees. 2 year price target would be 1,326 rupees with the price cumulative growth of 18% and 32%. So their average median P is about 17. So I'm estimating them to do about 2021 because their growth rate is improving. They are going to do about 12 to 14%. So I'm estimating their P to 20 and 21. So if I have to talk about my verdict, so this is a pretty good company, pretty large cap company with almost they are getting their revenues, their cash flow machine, they are getting money from their businesses, and they are paying out to shareholders. It's a pretty good company. So if you ask me whether this stock is a good buy or what's the current valuation, so if you have to tell the stock is currently fairly valued, so it's not undervalued, it's not overvalued. At the current price, it's fairly valued for the business prospects it has. So if you ask me whether you can invest in this company or not, it depends on what kind of investor you are. For example, if you are a conservative investor, you would like a safer company. If you want to be, especially with the market turbulence you are facing right now, a lot of companies are falling pretty steep. So if you're a conservative investor and you want to go to kind of safe stocks with conservative value investing kind of that strategy, so in that case, this company is a pretty good buy. But then if you are if you are an aggressive investor, you would like pretty good growth companies and you want to be aggressive, you want to take a more risk, then this stock is not for you. You can have some other stock with a better risk to reward ratio, but then this particular company is most suitable for the conservative investors who want to be go in a kind of safer side. So that's all from my side. So if you like this video, please like, share and comment, and if you are interested in monthly newsletter from this channel, please subscribe in the link below. That's all for today, and thank you for watching and have a nice day. Bye bye.